Okay, it's exactly 5 p.m. where I am. So I'll get started. So welcome everybody to the first of the year webinar from Edgerater, and we're kicking it off with a quarterly review with Dr. Ken Long and the OBUG group. And this is an idea that we discussed among ourselves late last year in December, and the idea was that we would get together once a quarter to for Ken to present new ideas and new research, and for Phil and Griff to also contribute with what they've been working on. And I think that ties nicely in with obviously uh, being able to do webinars myself and interject in the meantime with updates about technical aspects of the program. And there's been a fair bit that's happened in Edgerater. And I know Wojtek said he hadn't heard from me for a while, and the reason is that I've been in a bit of a development phase. So there's been a lot of new additions to the program, but I was planning for the first part of this year to get online and start talking about what's been happening. So that is the reason. Obviously, the disclaimer, everyone knows about that. Um, and for those who don't know who I am, there may be some new people here. So I'm Chris White. I'm the founder CEO of Edgerater, and it's a software program that's been around now for 15 years. It's been quite a while. It primarily is good for backtesting. Was the original idea to do backtesting, and has evolved to do a whole host of other things, including signal generation and putting together expert scripts from the experts, people like Ken Long and others, and put them in an easy to consume way so that you don't have to be an expert in writing code. You can run templates and you can get signals. And if you need to delve deeper, then you can write code. And it's a very extensible program. So the collaboration with Ken Long started about 2 years ago. And if you haven't yet seen the session we did towards the end of last year, the link is right here. If you go to the Edgerator website, you will be able to see you'll be able to go to edgerator.com/experts/Ken Long, and the 1 hour and a bit session that we did, I've split into 6 videos, uh, separated them out into logical parts. And so, in addition to that, in the 2 parts which talk about swing templates and critical states templates, I've also added a little section from myself where I actually go into the program and show you some of those signals. So it's well worth checking out. And then we haven't really talked in depth about the Al Bundle user group, the OBUG group. This is something that's run by Able Way Tech, and that's Phil and Griff. And Phil and Griff are here online with me right now, and they're sort of also integrated with Ken Long. And their focus is on running weekly sessions where they go in depth into the strategies, and they do a whole host of backtesting with multi-factor analysis, using Edgerater to really see where the edges are, to uh, try and find the edges, etc. And they present all that information on a weekly basis. It's well worth taking a look at that if you haven't already. And so what I wanted to do, if you haven't seen the templates in Edgerater yet, uh, and you can see these if you are on the trial of Edgerater. So I just wanted to show those and where to get them. So if you run the program, Edgerater, it's a desktop program, you will come into the main screen here, which is your list of templates. And on the right-hand side, there's the library of templates. And in that library, there's quite a few categories there now. But the category of interest for this particular session is the Dr. Ken Long category. And in there, you'll find 4 different templates. You you will find you'll find 4 different templates. The one at the very end. So the three Ken Long ones are the main ones, and then you will see another one which we're not talking about today in any way. That's something for the future. Right. So in order to run one of the templates, you basically just select it with your mouse and you select a symbol list to run it against. This is the way that you run any template in Edgerater. The template really is just a configuration of what scripts to run and what to show you after you've run it, and then you run it on a particular symbol list. So you just hit the run button. I'm running this on a list of CBOE weeklies. That's a list of stocks that have weekly options. There's currently 666 of those. And the reason for using that list in my case is just that it's a very liquid list of stocks. Stocks don't tend to have liquidity. I mean, stocks that have weekly options tend to have liquidity. So that is the reason for that. And what you'll find when you run any template is you'll then see the report that's been specifically engineered for looking at those the results of that template. And in this case, it's essentially when you run the critical states, which I've just run, you'll see the 5 critical states and then whether stocks are currently in those states. And the 5 states are the fireworks, the Humpty Dumpty, Fence Sitter, Godzilla, and Catfish. If a stock is currently sitting in one of those states, it will have a yes. You can sort by clicking on the headers to bring them to the top. And then you can look at the chart by selecting the row or any cell in that row. And then as you scroll down through your list, you'll quickly see the chart update. And the chart is also very specifically configured for the template that you run. So if I ran a completely different template looking at something else, this chart would have a layout in specifically for that system or that template. So that's the way it works. The fireworks here, it's always interesting to see the fireworks stocks. If you look at this every day, you'll see the stocks that are, high. That's basically is what it's showing. They're in various look back timeframes. They're at highs. So this gives you an idea of what's going on currently in the market. A very quick look. But obviously, these are just signals. What you do with signals is the whole point of this presentation. Signals are great to look at, but you need to be able to develop a system from there if you're going to be trading profitably and successfully. And that is what the OBUG group does to put together, and also what Ken Long offers in application of those signals. And Ken will be here talking about that. Don't know if he's online at the moment, but he'll be here. And then the majority of this presentation will be to Ken. But for right now, I would like to hand over to Phil and Griff from the OBUG group, and they can give you a quick rundown on what they do, and we'll take it from there. So, Phil, can you take the screen?
Yes. Yeah, thank you. Thank you,
Yeah,
Chris. Let me share my screen.
I'll just stop sharing mine. Maybe that will help.
Okay, can you see my screen?
Yep, we've got it.
Okay. Yeah, thank you, Chris. So I'll take the team here through the OWL Bundle user group. It's a small study group focused on studying Dr. Ken Long's trading systems using Edgerater for analysis. We meet on a weekly basis via Zoom. We spend about an hour to an hour and a half. We have a structured agenda going through first the market context using Ken's set of indicators. Then we go through various studies and backtest studies. And we've started to do some forward testing on the backtest. All our sessions are recorded, and we have presently approximately 20 members with various skills in trading. On the right is a typical agenda. So again, we start with a scan of the market. Then here we have some slides on the charting analysis, long-term and short-term analysis, and then we go through various backtest studies. So we're using Edgerater to test the ideas rigorously and to understand where the edges actually exist. So Ken's developed a number of indicators over the past, and this allows us to do a deeper dive to understand the uh, the advantages and limitations of the various indicators, and then to combine these different indicators into a diversified portfolio of strategies and reduce correlation risk. And so the goal is to move from indicator testing to validated systems. On the left, we list some of our different studies that we've covered. Most recently, we're starting to uh, work towards developing a system based on Dr. Ken Long's logic chain strategy. So that's the notion where the market, you take into account the market, the sector, and the symbols to be able to develop a system based on this logic chain strategy. All our studies and so forth are stored in Notebook LM so that there's an easy way to access. If you have a particular question, you can use Notebook LM to determine which OBUC session the topic was covered. The next slide just gives you an example of one of our recent studies on Ken's critical states template. And so the critical states, the word which Ken used is very it's a very strategic, if you will, word in the sense that it's based on the location and volatility, and they're all in different states. So an example, this is the 15-year equity curve, and these are the various strategies as part of the critical states. But what you'll notice, for example, when the fireworks system is resting, you see the Godzilla picking up the giving us a profit while fireworks is resting. And then uh, when the Godzilla is resting, then you see the fireworks picks up. So you see you have a set of non-overlapping strategies that work together so that at the portfolio level, if you trade all these systems at the portfolio level, you end up with a much smoother equity curve. So there's the notion of having a number of non-overlapping system working together to give an overall better return. So a lot of this is based on historical backtest studies. And the next slide, Griff will take us through some of the forward testing that he started to see how do the actual, if you will, live results compare with some of our backtest studies. Okay, next slide, Griff.
Thanks, Phil. Hey, everybody. I'm Griffin Cooper. I'm a longtime student of Ken's, and I work with Phil Wu at Ableway Tech. What I'll do here is just give a quick walkthrough of how we're handling forward testing inside OBUG. So once we've completed the back testing, we treat forward testing as an incubation phase. And I think incubation matters because it's where you see how a system behaves under real market conditions. There's no hindsight or interference. So all the critical state setups are traded together in like a master portfolio. At that point, the rules are frozen. There's no tweaking or optimization. We're using this curated symbol list, which is derived from Edgerater research, and that was itself derived from the CBOE weekly equities universe. The trades are taken in real time, exactly as defined. There's no going back and changing things in hindsight. You can go to the next slide, please. And then from there, the process is fully systematic. There's no discretion involved. We run daily scans in Edgerater using Ken Long's critical states template, and the positions are managed using a defined exit combination, a 15% trailing stop, and a 5-day time exit based on extensive testing. The trades are executed in a demo account, and the results are periodically reviewed as a group as enough trades accumulate. And I think that group is where execution, discipline, and the real world behavior becomes visible. Next slide, please. So if this kind of research, back testing, and discipline forward testing resonates with you, that's essentially what OBUG exists to support. We're a small informal study group focused on understanding the edges in Ken systems and other systematic approaches through real testing and shared research. It's not a hot alerts or hot picks newsletter or anything like that. Um, and on the bottom right there is from our web page. So for those of you who may be newer to Ken's process, we do have a 6-month OBUG option that includes our Swing Systems home study course as a bonus, and that can help accelerate the learning curve. The information and the links are on this slide. So with that, I'll hand it back to Chris or Ken. I'm not sure.
Okay, I'll take it. I'll just introduce. So Ken has joined us as well, and so the next part of the presentation will be for Ken. I already talked at the beginning about how we got to know each other and how we started developing the templates. And it's exciting that we have decided now to do quarterly sessions where we can bring Ken's insights directly to Edgerater users. So if Ken, would you like to take it away, Ken?
Yeah, sure. I can confirm that there was nobody waiting in the OBUG Zoom room where I was. I thought I was early for a change. And then as it got to be 11 my time, I said, "Oh, I'm probably in the wrong spot." So I apologize for being tardy.
No problem.
Can you see my screen?
I think it might be coming in. I don't see it yet, but it
Yeah,
looks like it's coming this way.
Oh boy.
Do you see it, Phil?
Let's try it again. Here we go. Let's give it half a second.
Yeah. There we go.
Let's try it.
Let's try him.
Yeah. So while that's loading, okay, there we go.
Yeah.
Yeah. So I want to change my approach from last. I think last time we had a session, I tried to tell you everything that was in my head, and that was a lot of stuff. So I want to try to hit the wave tops of some of the most exciting things, so that we can have some time for Q&A, and also to give you an idea of some opportunities for some new collaborations, and then things that we could talk about in future quarterly sessions. So I want to try to give a wave top of this with your permissions. So the first thing that I want to talk about is to update and connect the swing template with the critical state template. And this aligns with what Phil was talking about on the logic chain, where we connect the condition of the market or a market, and then look at how different sectors are performing inside that market to see if there's moments of advantage. And we're looking for things that are abnormally great or abnormally bad, or so smack dab in the middle that it could break either way. And you'll recognize that as the sniper trading templates. And critical state templates. But and then using that to find a symbol that allows us to establish that logic chain. The market is doing this. The sectors of interest are doing that, which sets up some symbols that are now postured to take advantage of people that are interested in the symbol and the sector and the market. And when you get that kind of alignment, you get large piles of money that are going to start pushing it with momentum. And that's a very good thing for shorter term trading, swing term trading. And that will often help reinforce a long term trading. So, although the two templates operate independently just fine, as all the OBUG back testing and our forward testing shows, it's very helpful to connect those two conceptually. So you could trade the swing trade templates by themselves. You could also trade that as a core system and then look for swing trade symbols that also set up for intraday. And you could then do a core and a turbo approach where you're trading with a trailing stop that's appropriate for a swing trade for the next 5 to 10 days. And intraday, when that symbol is moving in the direction of the swing trade, you have extra confidence that this is a truly directional move that has some institutional support. And so you can trade that with more confidence, which is nice because you're using systemic leverage, the leverage of two systems working together with discipline. And you are very efficient in the way that you're conducting your setups. Because if you already have a swing trade on that symbol, you know where the key price levels are for support and resistance. And you can use that information to help you with the intraday. So that turns out to be a very economical way to exploit the edge that the swing trade template gives you. The critical state template can also be the front runner. You might find some things that on a daily chart are setting up as a critical state with either the Godzilla or the catfish or the fireworks. And those lead to persistent edges once they fire and are successful. So you might very well see a symbol that fires on a daily chart on a critical state, and then that leads it into a swing trade time frame. You might end up trading that thing 4 or 5 days in a row. And so you can grow from the critical state to the swing template and use those patterns because they'll start emerging out of that critical state template. So taken together, these represent a very robust way to take advantage of the increase in short-term volatility that we're experiencing in the world of AI trading and automated trading. And by volatility increase, what I mean is that you're seeing larger moves on average, both intraday and during swings. And those moves are happening faster, and the reversals are more decisive. So you end up favoring shorter term systems if you have a disciplined, systematic, professional way to handle the volatility. So that leads me to the next idea. Chris asked me to talk a little bit about common failure modes. And I think the single biggest one to be concerned with is confusing systems. I'm sorry, confusing setups for systems. There's any number of ways that you can start with the setup as the entry into a system, but a genuine system is going to answer all of the systems definition questions that we learned from Dr. Tharp from his 10 tasks of trading, takes into account a full appreciation for system, self, and market. And then the setup and the entry are simply one element of that overall system. You can then wrap that entire system inside a trading system, which is now going to take care of your administration, your costs, the research, and infrastructure and all that jazz. So the difference between a professional and an amateur is the amateur wants to focus on the latest shiny thing, the latest hot take. A professional is operating from an attitude of disinterest, to be honest. A professional is looking at each individual trade with sort of the minimum amount of attention to do the right thing, but not obsessing about it, not trying to make it work. It's simply he's erected a structure around a trade frame and follows the price and uses rules to get in and get out. So connected to that is the idea of the difference between intuition and um, uh, judgment and reflective judgment, or professional conscious competence. I would say it that way. This is something that I'm exploring with Army senior leadership right now on a major artificial intelligence project. I had a meeting this week with the Chief Technology Officer of the United States Army. He's a four-star general equivalent. His executive officer is one of my former students, and he got me some time to talk to him about strategies for using AI in a professional way to support senior and mid-level managers in the Army, and how we teach that and how we roll it out and how we incorporate that into our decision-making process. Well, intuition turns out to be an extraordinarily important part of that equation. I'm going to jump down to where you see AI as a second brain, and I'm going to talk about the human AI relationship. It turns out that human AI relationship is how you should think about AI. It should be like any long-term partnership. It's mutually respectful, leverages the strengths of each, features communication, um, protects the weakness of the other. The synergy is greater than the sum of the parts, and the roles and responsibilities are clearly defined. So that leads into the 80-20 rule with respect to trading. And oh, by the way, it turns out that if you overlay military officers' cognitive requirements for decision making in combat, and you overlay that with traders making rapid decisions with skin in the game, it's about a 99.5% overlay. They're the same thing. So it turns out that the things I'm studying with the Army really apply directly to traders. And if I'm being honest, the research that I am doing with traders maps directly to what I'm helping military officers understand, because traders have an innate ability, I think, or a studied ability to quantify risk and reward, and are used to making rapid fire decisions with limited information and then adapting to dynamic market conditions, which is another way of saying they're used to the combat mindset. Well, here's what we're developing with the 80-20 rule. We think, both for military and trading, that you should think about your production systems separate from your R&D systems. Like, I've got a guy that I'm coaching right now that we've gone as far as doing his production trading systems in one room and his R&D work in a different room with a different computer, so that he very clearly establishes the different mindset that's at work when he's in that room. Now, you don't have to go that far and set up different physical rooms, but you need a way to have a very clear sense of where you are and what you're doing. So when you put the 80-20 rule on that, it sounds like this. You should have about 80% of your money in production systems, where you have designed the system, back tested it rigorously, forward traded it with increasing skin in the game until it rises to the level of a production system. And you use continuous information and analysis to adapt the rules according to good logical principles, not intuition at all. Intuition might show you where you might look, but you want analysis and logic and math to drive the actual production level decision. So you want about 80% of your capital in your production system, and only about 20% of your capital at maximum funding your R&D approach, which should include scanning for new ideas, adjusting new current ideas, paper trading, and then low position size prototype trading so that you can start growing some different ideas. And you might have 4 different ideas that are distinct from your production systems so that you can explore the next opportunities so that when your production systems start to decay or degrade, you already have the next ideas that are already proofed, and you can adjust in a portfolio of systems approach, like Phil was talking about. So, in our view, you want about 80% of your capital in production and only about 20% of your time spent on operating those systems. Why do I say that? Because that forces you to be very systematic and rules-based and efficient in the operation of your systems. You don't want that to be complex, time-consuming, cognitively pricey. You don't want you to be the single most important part of that system. You want to be able essentially to own the franchise, have the managers run it, and then once a day swing by and see how we're doing. So that's about 20% of your time, very carefully allocated to management, analysis, adaptation of systems, making minor adjustments. Now, when you look at your R&D, we think you should have not more than 20% of your capital, by which I mean money and infrastructure, only about 20% of your capital involved in testing that stuff with forward trading with skin in the game, so you see how it actually performs. After your series of back testing and paper trading is completed, you want to be trading that forward with skin in the game to see if the live forward trading conforms to the back testing results, to see does it actually perform in the real world the way it did in practice. So we want a lot of attention to detail on that. So I'm only using 20% of the capital for that, but I've got about 80% of my time spent on studying and tweaking and adjusting and creating the robust set of rules for the system after next. As those things prove themselves, you can move them from R&D into low rate forward production and then into full rate production so that they become part of your production systems. And once you've done that, it becomes not very intensive for time to manage it because your rules and your automation are running that. So the 80-20 rule now becomes a way to be very clear about the 2 different roles that you want as a systems trader: production systems and research and development systems. And the 80-20 rule governs capital and time. So to review, production systems, 80% of your capital, 20% of your routine, professional, analytical time. R&D is where you can start exploring boundaries. Do I want to just try to extend a current system or actually go out into some new area where I've never been before, but now looks like it's an opportunity? So I have scouts out investigating, testing different ideas, rapid prototyping. That takes a lot of creativity, critical thinking, systems thinking, all of those things that it takes me to rapidly go from the hint of a whisper, of a shadow of a good idea, to prove that it actually has some merit and could become a system. So that's very time intensive. What I have to be sure is that I'm in the R&D mode when I'm doing that, and that I am only trading with just the minimum amount of capital to give me insights into real world trading. So I would add that to a common failure mode, is that guys that are not disciplined and systematic and professional are blending those 2 different roles, or they're going in and out of phase, or they're trying to do both of them at the same time inside the same trade. I see an idea and I want to trade it at the maximum level possible because I like it. And so now here I am doing R&D and a live trade at production level, and it is disrupting my mindset. And then my emotional response is all out of whack. God forbid that it actually works, and then I start getting larger until I explode. or it becomes such a failure that I question my own identity and purpose and being and all that and drift into burnout and PTSD. So we don't want that. By the way, PTSD, that's a real thing for traders in the same way that it is for Army officers in combat. I can speak from experience on both sides of that. And there are ways to handle that. So don't suffer in silence too long with that. If you have challenges with that, there are things that can be done that are good for your health and your sanity and your family. And that's pretty important. And I take that very seriously. Talk to me later if you have some questions on that. So that's what I mean about the human AI relationship now. If I add that to the 80-20 rule, I can actually ask AI to say, where can you add value in my production side? Well, it'll find clarity of rules. It can help me back test. It'll look for redundancies or contradictions between systems. It can help me automate processes. It can certainly help me find themes and patterns of what is underlying and give me ideas about where to look for more. So AI can be very powerful in that one. On the R&D side, AI is very useful in rapidly evaluating the ideas of other people to turn whatever idea they have into our structured template for a system definition, and then turn that into a set of rules that can then be tested. And using Edgerater as the analytical engine that gives us the power to do all kinds of comprehensive tests that tell us if there's gold in that mine. So I don't want my intuition doing more than simply finding interesting places to go. As soon as I can hand that off to a structured, systematic approach, hopefully I'm using AI to help me. Now what I've done is I've found the best blend between the human and the AI. That's the human AI relationship for R&D. Human AI relationship on production. I'm using the AI to help me establish the statistics and performance measures of my trading, looking for opportunities inside that, nominating ideas for me to consider with my intuition. So as we think about when to use intuition and when to use analytical judgment, the best advice that I'm seeing and using is that I want my intuition to be associated with how much risk I'm willing to take, and not intuition on monkeying around with an established rule set, especially in the trade. So my strongest advice to you is, if your intuition is not comfortable taking your current level of risk on that routine trade, respect that so that it gets processed, and use that to either increase or decrease your position size. And then study the effect of adding your intuition to that trade. What that does is it leverages the strength of the established frame and the rule set, but it also respects the possibility that as pattern-seeking mammals, we have access to cognitive processes in our head at the subconscious level that we can't articulate, and which may be seeing things that are outside the current boundary of our existing indicators. There may be some fat tail event that gives us an insight about the changing nature of risk that our indicators may not catch. I'm going to show you a silver trade over the last 5 months that's a couple hundred R that allowed us to get, an intuition allowed us to get out of that trade in the leveraged silver fund at a intraday price of 400. It had achieved a peak price of 420, and we were able to get out of that at 400 just prior to it dropping the next day to 330, and then yesterday losing 60% of the market value of that silver trade. So intuition gave us earlier alert about 2 weeks ago that we needed to be reducing our overnight risk on those positions, and then treat silver only as an intraday trade, which we've been doing. So we didn't change any of the patterns or the trade architecture with that intuition. The intuition was a guide to changing risk conditions inside the market. And uh, that's my advice now on the human AI relationship, and then the relationship between the human's intuition and the AI's disciplined, systematic capabilities. So I'll come back. I want to go back up to the complexity toolkit. So this is work that's coming out of working with senior Army leaders over the last 3 years, where we have recognized that the world is more volatile now than it ever has been before, and that we're getting significant changes in market directions or global directions with less and less warning. The last year in the Trump administration that's been a feature of the political decision making of this administration. Like, I don't know right now if I should be preparing war plans for Canada, Greenland, South Korea, NATO, uh, if I should be encouraging Alberta separatists to come join the U.S. while figuring out how to keep Michigan inside the United States. So there's a lot of things going on. And we've created at our college the complexity toolkit to help us systematically approach management of volatility. And it has a direct connection to the mindsets that we need as the human trader, especially in the human AI relationship. So this is how we look at the complexity toolkit. There are 5 cognitive skills, 5 bodies of knowledge that we think collectively help us do a better job of making good decisions under volatility, uncertainty, complexity, and ambiguity. We call that VUCA: volatility, uncertainty, complexity, and ambiguity. Now, the good news is that Edgerater allows us to calibrate all of those through backtesting and rule development. So that's actually a way that you can use Edgerater as a tool to extend your systems thinking, your data literacy, and your critical thinking. So it hits 3 out of the 5 already. With a little tweaking, you end up finding how it supports you with creativity. The best way to use Edgerater for creativity, though, join the OBUG, talk to 20 other power users, each with their own viewpoints and time frames and preferred systems, and use the dialogue among trusted professionals in that safe space, and let your mind be open and look for inspiration. Turn that inspiration into a research project and use Edgerater to bring it home. So when we think about the complexity toolkit, then it's actually a combo tool. It's a combination tool, like a Swiss Army knife. They're not 5 separate things. They're actually 5 power tools that work together in a larger meta system. So it typically starts off with, and I put in parentheses, an initial critical thinking event. And what that means is that you're monitoring the world in the usual way, following your rules, and then something abnormal triggers your attention. You're not sure why. All you know is that intuition happened, and that you have a procedure to immediately follow up to see what should be done. That's the connection between intuition and the complexity toolkit, that it triggers a critical thinking response to find out more about what was that environmental cue that told me something might be a little different here. Silver crossing an intraday threshold of 400 in the ETF AGQ, that was a significant emotional event. That intuition triggered a response to reduce risk, to put our stop much tighter, and it went to 420, then reversed, and that was enough to get out of the position. And that saved us $80 a share over the next hour. So the complexity toolkit starts with a critical thinking trigger. We then use narrative inquiry or story thinking or visual imagery, storyboarding, free association, dialogue to create a very large potential solution space with our imagination. We now have room to explore for possible solutions. We then pick a system that looks like what is beginning to emerge from that trigger so that we have a structured way to start trying to solve that problem or seize the opportunity. So systems thinking is a way to start finding your standard templates, applying it to the moment, finding the best fit, and then acting on that opportunity as if you picked it right, but using critical thinking to determine when that frame no longer fits. So this is an adaptive, iterative process. So critical thinking to trigger, creativity to expand the space and energize, systems thinking to start turning this into a structured research project, data literacy to ensure that we are bringing in quality, sufficient information of the right type to help us manage that kind of a problem. Different problems require different data. All problems require good data, and data literacy includes following good procedures to test ideas. And that's where the systematic backtesting of Edgerater gives us a tremendous advantage. Once we've identified the kind of a problem we think it is and applied data literacy, we can use AI to rapidly iterate. In the case of Edgerater, you're actually getting the equivalent of that when you start doing your structured portfolio back testing with parameter stepping. And then when you think you have a reasonable, robust answer to the research that you just did, we finish up the complexity toolkit approach with another session of critical thinking that is as large as the amount of creativity that we used. So by definition, when you're into this kind of an area and you're exploring new space and you used a certain amount of creativity that ends up at a solution, you want to protect against your enthusiasm with an equivalent amount of critical thinking to really double check and test for robustness with sensitivity trading. And this is where Edgerater is just another magnificent use of Edgerater, is it allows you to systematically test for sensitivity and boundary conditions. So when you take all of that stuff together, what you have is a systematic approach to using all these power tools to, in a rapid, efficient, organized manner, go from an anomaly, something strange here, all the way through a systematic approach to coming up with the best professional response. And now you have grafted that back onto your normal operations process where you can trade that just as another trade in the repertoire with routine systems professionally. So that complexity toolkit is something I'm exploring in our coaching program with our advanced students. It's also like my number one job at the with the Army right now is turning that into practical tools that the Army can use. AI is a second brain. The only piece I haven't talked on there was the Notebook LM, or that's the next piece. If you're not using Notebook LM, you really should consider it. Phil and Griff are using it to great effect at the OBUG. I've built 20 different second brains with Notebook LM, each one of which has over 200 million curated words that give me deep dives in comprehensive assessments of the body of knowledge of a bunch of different topics that are of interest to me, like political science, economics, ethical philosophy, leadership, team development, organizational improvement, all that jazz. But the very first one that I built, that it became a model for what I'm doing with the Army and in other areas of interest, was the 5 frames of trading. So that was my first and my best second brain at Notebook LM, the 5 frames of trading. So this is what we put into that. The notebook allows you to establish 300 different buckets or sources of content. Each source can hold up to 500,000 words or about 10 hours of audio. It turns out that if you turn your audio into text, you can have much, much more content. So don't store it with audio, although that's a place to start. So here's what we've done over the last 2 years with that. I've gone back through my 40-year career of teaching and trading. I've taken the recording of every single workshop we've ever taught, every book I've ever written, every system I've ever designed, every lesson I've ever taught in any workbook, all the research that we've done on our annual research weekend over the last 20 years with our community of practice, all the trading books I've ever read, the book reviews and career summaries of the top 100 psychologists of traders, trading psychologists, the best 50 books on practical trading, like the work of Mark Douglas and all that. I've taken the 2,000 hours of direct coaching that I've done over the last 3 years, turned all that into giant text bundles, dropped that into Notebook LM, and that becomes my 24/7, never tiring, never grumpy AI assistant coach. So every time Phil and Griff send me a question about something, I say, well, let me think about it for a minute. What I really do is take their question, go right to the AI bot, and try to figure out what I actually think about it. The way to use that best, by the way, is to take Phil and Griff's good question, quickly sketch out the dimensions of how I think the AI is going to answer it as I try to remember all the words I've said in my life, right? Memory fails. So I sketch out what I think a good answer will look like, and then I run that question through the AI, which is now here's the beauty of Notebook LM. The default settings is really pretty good. However, you can take 5,000 words and define a very complex, comprehensive persona that you want it to act as. And so I've done that with the same one that I use for a strategic persona for advising four-star generals. And I turned it into an expert scholar practitioner for trading excellence. And it runs through what is now about 350 million curated professional words associated with trading, psychology, markets, performance coaching, self-actual, all that, all of Van's work. 350 million words. There's 300 words on a page. And so that means that there's about 1.5 million pages of that's like Library of Congress says. So the Notebook LM is a part of our coaching program, and I make available to the guys that meet on a weekly basis. They come in with their implementation of our strategies, the same kind of things that guys are doing with Phil and Griff, and they're making it fit them and their circumstances. And I meet them where they are and help them with performance coaching and systems coaching and emotional management coaching and stress management and healthy living and research and lean thinking, like the Toyota production system. I'm an industrial production engineer by training, and so how to improve mechanical systems through the attention to detail and data is what I specialize in. And so we take that approach with the way we improve our trading and training the operators of those systems. So guys that are in that coaching program have access to that for unlimited Q&A, and it's pretty amazing. So if you have not yet used AI, I can strongly recommend Notebook LM as a really powerful tool. It's the Google large language model called Gemini 3.0 is the engine that does all the analytics. Gemini 3.0 is the #1 rated frontier AI model. So it's rated higher than Grok, higher than Claude 4.5, higher than ChatGPT 5.2. And it includes all of the technical proficiencies that Google has developed over the years to do summaries and indexing knowledge. And it has a million token window limit, which means that the amount of operational space that it can use to compute all of the things that you're asking it to do is the largest of any of the frontier models. So you don't run out of space and it won't start forgetting things at the tail end in order to make room for new ideas. I've had chat threads on that are 2 and 3 weeks uh, long, and it is not even close to using 1 million tokens. So I would tell you, Notebook LM is an inexpensive way to get in. It will turn your audio into text. It'll analyze that text. It will give you insights and summaries and book reports and slide decks, and it'll create synthetic podcasts to help you listen to the words that it writes, but in an audio form, like a dialogue that is very easy to listen to and allows retention of complicated material. It's so good that I've incorporated into all my Army teaching with my professional officers, where I've taken everything that I've ever written or taught about and put it into an assistant for them so that they can access that knowledge in ways that are helpful to them. So that's what I mean by the human AI relationship. That's the area that I'm specializing in for optimizing human performance. And the key insight I want to leave you with on that is you're not replacing the human with the AI. What you're doing is finding ways for the AI to support you and train you and educate you in day-to-day operations so that if you ever lost the AI in the network, you have an amazing set of walking around knowledge. Here's what I mean by that. I have the AI writing assistant that turns all of my spoken words and my written materials into highest quality professional writing. I call it the AI optimized style. So it writes the way that I wish I could write naturally. Well, here's what has happened. I've been using that every day for 4 hours for the last 2 years, at least 4 hours a day. I used it 8 hours last night. Um, you are the average of the 5 people that you spend most time with. If one of those people happens to be an AI persona that is a strategic thinker, a poet, and an engineer that writes beautifully and is well organized, and you engage in the chat window with that and go back and forth, that is starting to shape the way your brain is operating. And you will start taking on those qualities of deep thinking, systematic approach, disciplined management of self, improved written and oral communication. That's going to become your natural habit. And even if you don't have the AI with you, I can write emails and papers in that style now that are far superior to what I ever produced, even a year ago and certainly 2 years ago. So, one of the things that you want to think about is how to establish a long term relationship with AI. And if you're within the sound of my voice and you have children or grandchildren, I think the single best thing that you can do is prepare them for that kind of a world. Because the people who are going to make a difference are the people that know how to leverage their own skills and their own interests and have AI help them achieve that. So the big breakthrough for me was realizing that the AI was the expert in how the AI could help me. All I had to do was develop a problem statement and a desired outcome and the standards of performance that I wanted it to achieve. And then I could ask the AI, given all of that, what is it that you think you can do for me? Create additional agents that are specialized that'll support me, organize it in a multi-step process where I can check the outputs for quality so you're not hallucinating and guide me towards that successful delivery. That's what I'm teaching Army senior leaders to do. That's what I spent 10 minutes discussing with the chief tech officer of the Army, Dr. Miller, because I was showing him how that will add value to every staff headquarters, every senior leader across the entire force. Very powerful moment of insight, not just for trading, but through all executive decision making and cognitive framing. It keeps you in charge of the end result and the methods we're going to use to get there and the values we're supporting and the ethical use of knowledge and information and communication. But it brings in the power of all the mental models and processes that you've put into your AI assistant. So that's what I want to say about that. Let me jump to the bottom here. Right? So where's the fire? The whole idea of our swing trade templates and critical state templates, intraday trading especially, you could almost just say simply, hey, where's the fire? Go get warm or go put it out, and then react according to your firefighting systems and rules. So what I want to do is kind of quickly, if I may, go through a speed run of 10, um, 10 different trading cases from the last week. Oh, sorry, hit the wrong button. And I want to just show you each of these trades was something that came about from either a swing trade template or the critical state template, or was a continuation pattern from one of those trades that got us started. Here's some ideas for you, Phil and Griff. So try to stay awake over there, right? Hey, so what's the truth about Trump? Well, here's one way to look at it. This is a year-long chart. It compares the Vanguard Total International Stock Index Mutual Fund, VTIAX, which is the global market minus the US. So it's US versus the world. Way over on the left-hand side, where you see the first yellow circle, Trump's election, they started off together. Immediately, you can see the Trump dump sell-off of about 20%. The world only suffered half of that, and then both recovered at approximately the same rate, but the world has been recovering a couple percentage points a quarter better than the US. And so now at 1 year after the inauguration, the global minus the US is up 31%, the US is up 15%. And it's not changing anytime soon if you're paying attention. So as a quick check, what's the allocation of global versus US in your portfolio? Do you have a systematic way of looking at that? You could start with that as a creative idea and backwards plan into a research project for OBUG. And I fully expect you guys to have a systematic answer to all these questions in about 2 weeks or less. But meanwhile, that's the thing, and that's happening. If I drill down a little bit further, this is now market, sector, and symbol. So this is a 1 day chart of the last 2 years of ETF EWC. That's Canada. Now, where the vertical yellow box is was um, Canada's just monkeying around earlier this year in the start of summer. It had a pretty good run, but was in a 3-month consolidation phase. And then at the first green dot, we had a trigger that where it was supposed to have failed, but it didn't. It broke through the modified PSAR that we used, the blue dots, and gave us our initial COTA 2 pattern. See Griff for details in the home study course for our first position. The next critical state was the horizontal blue line. That goes back to the previous maximum favorable excursion of the RL10 at December 2024. When price and the RL10 move through that, that's an automatic signal for the emerging dragon. A second position is established, and then Katie barred the door. All it did was continue to grind. We added a third position, a fourth position, and then at the red dot, we had the RL10 cross the PSAR, which made it flip and gave us our first exit. It did not fail. It didn't even get back to that dashed red line, which is the 30-day simple moving average or the middle of the river, but it found a recovery. And then as soon as it broke through the PSAR once more and flipped, we put all four positions back on. And then the Trump Canada Greenland effect took the front burner, and off Canada goes, making global economic deals with China and the EU and Japan, and being able to not be affected by the threat of U.S. tariffs. So Canada's in a better position now than it's ever been. And so facetiously, you could say Trump is making Canada great again. When I go down and look at the MACD histogram, I realize that the current move is only just beginning to come into the summer. This thing is still very favorable, and Canada has more legs, and there's no overhead resistance. So this is a way that we might manifest market, sector, and symbol. We might use the swing trade patterns to give us earlier insights into turnaround conditions, and then we might leverage that through our swing trading. And Canada is liquid enough to even do some intraday trading. If you're a currency trader, you might enjoy taking a look at the U.S. Canadian dollar pair as a way to go. So that's that. Uh, another another way to look at this. This is a frame that we use to look at turning points. What I've done here is minimize the bars so they're very thin. And what I've done is I've put the moving regression lines that we care about. These are fractal in nature, the RL 10, 30, 90, and 270. And what I do is I look at the turning points in the RL 10. The RL 10 is the blue thin line, and the blue circles are every place that the moving RL 10 has reversed. You'll notice that when the RL10 reverses, it changes slope direction at a single point. It comes to a sharp point. It has an advantage over other simple moving averages, which it's very hard to see the actual turning point because it just kind of oozes over. Like if you look at the dashed red line in the middle, that's the simple moving average 30, the middle of the river. That's the mean that the price reverts to. So if you could just look at that as a combination, you could say, what's the distance between the maximum excursion of the RL10 away from the simple moving average 30? When that becomes statistically significant, then the reversion to the mean trade is set up, and I can calibrate that distance by my unit of risk, whether that's ATRs or if it's intraday, frog boxes. See the OBUG guys for how to do that. But what this allows me to do is start taking a look at where is the market within its overall ecosystem and season, and what's the slope of those regression lines, but where are those turning points that now allow me to dial in and maybe do some intraday trading when the market gets surprised that it's turning at a place that we know that it's turning, but they may not know because they're not using our methods. If you look at the two yellow boxes, the first narrow yellow box is simply yesterday's price action expressed as a box, and that's my yellow zone. So anytime if price were to come out of that yellow box, I would be interested as a potential breakout. The larger yellow box is simply the size of the yellow zone if I looked at the 10-day high and low. So if I'm a swing trader, I'm interested in a breakout above 695 or a breakdown below 675. Those become abnormal events that are the ecological signals that cause me to activate the complexity toolkit and start responding to that with a planned trade. Now, if I know where those price levels are right now today, which I do, I don't have to wait for the breakout to begin thinking. I can already have that scenario planned, framed, rehearsed, and ready to go and called upon whenever needed. I'd rather have 10 frames that I didn't need than 10 opportunities and no frames. I would rather be over prepared and make execution easy. So what's that look like in the real world? Well, here's one. Here's an intraday one. This is uranium. It was in a compound critical state. The blue box in the lower left is the last 30 days of the previous day. It had a significant gap up, so that's the fire. The first green dot was the breakout, and it failed, and we took a 1 hour loss. It's set up with a 1-2-3 entry. We took that. It failed for about a half an hour loss. It gave us a COTA 2-3 bars later. That one allowed us to get about a 2.5 hour trade, net positive for the day. They all look the same leaving the station intraday. And so I'm not right or wrong for having traded it. I am following rules and trading it at a level that allows me to stay in the game. And so that's not affecting my ego or my identity. It's simply me being a disinterested professional trader. Later in the day, there was another even larger significant move, but I did not have time, will, pattern, and money, the four requirements to take a trade. I have to have time left in the day. I have to have the emotional will to be able to trade in the zero state. I didn't take this one because I had better, easier patterns. So time, will, pattern, and money. I have to have all four of those things to have a trade. The one that changes the fastest is the will. So the emotional component of those four factors is the one that is the most variable. Am I in a professional mind state? Because it's yes or no if I have enough time left in the day or the week to trade. It's yes or no if I have the correct pattern with no shortcuts. It either fires or it doesn't fire. And then it's yes or no if I have enough risk capital to be able to trade uh, going forward live. So three out of the four questions that you have to answer are yes or no and objective. So the one that's of interest is the human in the loop. So self-study, psychology, improving that performance, being professional, that's an important part of your trading system. So that's uranium. Why is uranium important? Because data centers are going to triple the requirement for electricity in the grid, and nukes are the only way that you can satisfy that economically. Nukes need uranium. Hey, and downstream, nukes also need a lot of water to cool them. So you might want to start taking a look at the water sector and water utilities to look for a moment of advantage. Next speed run. Here's one in UMAC. So UMAC is Unusual Machines, a U.S. company that has Don Trump Jr. on the board. And what they do is bring drone manufacturing into the U.S. for military purposes. Still a brand new company. So again, the blue box is the last 3 days or the last three bars from yesterday, the last 30 minutes. It opened inside that and immediately broke down. I took the red dot short. It reversed for a half an hour loss, crossed the VWAP. The RL10 rolls up. I get a 1, 2, 3 entry. I take the standard entry, standard pattern, not even thinking, at the second green dot. That works. I have 3R in hand, take the second entry, 5R in hand, take the third green dot. It goes to a peak. I leave it as long as I can until the third position is still barely in the money. I take my exit and cash 9R, no overnight risk. It's on my everyday watch list because this turns out to be reliably volatile and directionally strong. You just don't know which direction it's going to go. But when it goes hard intraday and it goes hard as a swing trade. And as long as Don Jr. is on board and the U.S. is making warlike intentions and robotic drones are going to be the way of warfare in the future for the next 3 years, UMAC is on my short list. Why can I say drone warfare is the future? Because 80% of Russian casualties in the Ukraine war are coming from drones. By far, the most significant insight coming out of that war is that everybody's going to use drones and not manned systems. So if you want to be a world power, you've got to have the ability to manufacture drones in your homeland. UMAC is part of that narrative, and it is a powerful trading symbol. Your mileage may vary. This one is Palantir. For a while, it was the show. Lately, it's been getting murdered. Again, this is an intraday 10-minute chart. Blue box is the last three bars, the last 30 minutes. Palantir gaps up, and that orange box is the first 10 minutes. I use the opening range 10 minutes as the breakout zone. The next bar broke down below that. It's coming back to the blue box. I get short with a standard $1.50 risk box. It absolutely collapses. The second red dot is a collapsing dragon. Third red dot is a collapsing dragon. The green dot is the 1-2 exit that preserves the third position in the money. So that's, I don't know, 5 or 6R. The next red dot is a resumption of the downward move with a COTA 2 short, standard risk, standard exit, 8R for the day. Nothing unusual to see there. It wasn't even fun. It was just the thing that I was supposed to do. This is AVAV on 10-minute chart. It's also in the combination of artificial intelligence and defense robotics area. Blue box is yesterday's last three bars of 30 minutes. Orange box is the opening range 10. In the next hour, it starts collapsing below the VWAP, which was the orange line. So I speculate a first entry with the standard risk box of about $11 on a $400 symbol. That's 1/4%. Second red dot is a collapsing dragon. Third and fourth were just, well, why not? It was getting murdered all day. It was the worst of the 50 symbols that I track every day and failing right in front of my eyes. So why not? So pile on, and that's about 12R. Standard exit when it comes back and hits the PSAR. Those little PSAR dots, by the way, that's not taken from price. That uses the moving regression lines 10 and 30 to be the price field to calculate a much smoother PSAR. You will love it if you do that. Give it a try. Test it in Edgerater. This one is Intel. Intel's been in the news, getting some defense contracts. Blue box, yesterday's last 30 minutes. Big gap up. I couldn't even wait for the 10-minute bar to fill, so I just took it because it was so far off the bottom. Second position in. Take the exit when it comes back into the dragon and the RL10 rolls over. Later in the day, in the afternoon, COTA 2 for another R. That brings home about 5R. This is Wheaton Precious Metals. It benefits from gold, silver, and platinum power. Blue box, yesterday's 30 minutes. This is so boring. You've heard this before. Gaps. It does not gap, but it moves out, crosses the VWAP standard risk, and it gives us 3R in about the first 90 minutes of the day and no overnight risk. Let's see. This is Canada. So now the one of interest. So this is, where is that darn? Here we go. Let me come back to this. So in the upper left-hand corner, let me try to expand this so you can see it a little better. So back in November 2025, this is AGQ. That's a 2 times leveraged silver fund. It's trading at 84. It was at silver was in our long-term blended monthly rebalancing system. It was one of the 3 strongest sectors out of our package of 30. So it has already a swing trade in it. It's up about 100% by the time we add the first green dot. So the first 2 green dots were simple short-term COTA 2 entries that we traded. The third green dot was a breakout to a 3-year high at 100. That was a big gap and instantly happened. So was prepared for the anomaly. I know what to do. I buy it with about a $5 stop. So that's buying 500 shares. I'm sorry, 100 shares with a $5 risk. So I got a $500 risk on that trade. The next chart we're going to see, we sold that earlier this week at 400. And this is what intuition will do for you and knowing your business. So the chart you see now, this is January 27th. I'm sorry, December 27th. We add a position at 200. So that entry that we just showed you from 100, that thing is 100% in hand. And at 200, I finally woke up and said, I should probably have more money in this thing. So we add a emerging dragon at 200, an emerging dragon at 220, an emerging dragon at 280. And each time my intuition said, this is so stupid. I am just chasing this. I'm nuts. The rules say use markets money and add to it. So I follow the rules. On the 21st, that thing gaps from 320 to 360, a 15% gap, and then runs up to 420 and then starts collapsing. And I said, you know what? It's time to exit that swing position because I know how to get back in. I'm going to take off all of that turbo. And so we did at 400. And then intraday, that went to 360. And then in the making of this chart that day for the clients, it fell to 330. The next day, I don't have a chart for that one because it's too fast. It goes, oh, here it is. Yeah, I do have a chart. So here was the day after. The red dot was where we sold it at 400. It sold off all the way the rest of the day down to 340. The next day, I was sort of waiting for it just to find itself, no swing trade at all. It did a double bottom with one bounce in there, and then that's a caught of two. First entry, second entry, first entry 345, second entry 355. At around 370 going into the close, you're holding on to about 5R, and you got to say, well, what should I do with this? And the strategy was instantly cash it. I know how to re-enter this thing. Silver is in play. As long as it's moving intraday, I know how to get in. Why in the world would I want to take on overnight risk? We had an extensive discussion on that with the each of the weekly coaching sessions that we do. The ones that have access to the AI assistant. We had that extensive discussion, and then 2 days after this is when it opens 40% down. Hey, when it gapped down 40% at the open, you think, well, that's the pain and suffering. No, it fell another 30% intraday, which was the trade of the day for me, because that thing dropped like a stone. Oh, and after it hit the bottom and found support, we could support and spring. It's the same pattern. Where's the fire? Which of our symbols are in a critical state? Which ones are hitting with swing patterns? Combine market, sector, system, standard patterns, standard risk, robotic execution of symbols. Use your intuition and creativity on your research and development with 20% of your capital. Use 80% of your capital and only 20% of your time to execute professional rules. There's a dozen edges that you have if you do that compared to the herd. Guaranteed. Can't guarantee because obviously your mileage may vary, and I, see in court. But that's what I want to say about that was a week at work. All of those, with the exception of the early entry in Canada, all that's a standard week. I knocked out that thing on U.S. versus the globe and the Trump dump and all that stuff. I just wondered, and a minute later, I have that. That's a piece of intuition and creativity. I'm going to turn that into a research study, by which I mean I'm going to ask Phil and Griff to do some due diligence and tell me what they find. It turns out to be the easiest way for me to do my own research is to have a trusted community of practice that share a common framework, that share power tools properly applied, and then are interested in support to the team so that the people may thrive. If you don't think that's an edge, then I can't do any more than what I've just done, and that is tell you what I think is true. So that's everything I wanted to say. That was me trying to do an expedited speed run to maximize time for Q&A. So sorry about that. But, there we are. All right. Hey, Chris, Phil, that's everything I wanted to specifically present. and I'm happy to take questions or listen to you guys answer their questions too.
That's great. Yeah, thank you.
I'm not under any time pressure. So what I would say is I'll stay in chat as long as you want, um, but not more than an hour. I think we're going to eat breakfast with the kids, and then I would say if anything we've said is of interest to you, and I think we'll probably be able to make the recording of this, just send me an email to longke@yahoo or send it to Phil, and I'm happy to answer that in writing, because what I'm going to do is take that question and run it through the AI to show you what that thing will do. I forgot to even mention, this is where the businessman is supposed to say, I've been telling my clients that the price of the coaching program, which includes the AI assistant, is going up on 1 February. I've been telling them that for 3 months, and that today's the last day for them to get access to the legacy price for life, which means at $1,500 you get the over the shoulder coaching where you get to watch all of the coaching sessions I do live with the individuals, plus unlimited access to the AI assistant. You get that at a yearly rate of 1,500 for life. So as long as you remain now, even if you stop and then restart, it'll always be 1,500 for you if you take advantage of that price. It's going up to 2,000 on 1 February for all the other clients I have, but because it's not fair to you to put you under that kind of pressure, I would despise myself. I'll give you 2 weeks to think about it and just say, hey, I listened to your presentation. And in fact, 6 months from now, if you said you want to do it, I'd probably give you 1,500 because you suffered through this briefing. So if you're interested in that, talk to the team. You can already see what Phil and Griff are doing it with their body of knowledge with the O-Bug. Notebook LM is how you do it, fellas. 100% that's how you do it. And the coaching program allows me to concentrate on individual adaptation of improved human systemic performance. That's the best deal ever. I wish I had this 40 years ago. Anyway, just contact me if you're interested in that or need more info. And with that, I'll turn it over back to you guys. Eh?
Yeah, that's
Any
great.
questions?
Thank you. Thank you very much. Yeah, so we'll just see if there are any questions. If anybody wants to type a question in the chat, or if you want to have access to the microphone, let me know, and we'll see how we go. There's quite a few people on still, 27, so hopefully there'll be some questions.
Yeah, I did my best to chase them away. So
You only managed one or two. You didn't do a very good job there.
yeah.
I don't know, maybe they're all eating breakfast and watching the
Yeah.
screen.
Yeah. Well, like I said, if you just said, oh yeah, I'll put it in the chat. Sorry. Long KE. There you go.
Yeah, that's Ken's email. I think I just went to us. I didn't go out to everyone. I'll retype that.
Oops. Oh, that just went to the panelists. Sorry. Oh, okay, you got it. Thanks. Appreciate it.
Yeah. Yeah, that's good. I enjoyed those charts of the week, the intraday trading and the number of hours that you were taking out of the charts.
For the swing traders, what that can allow you to do, like if you get one of those really abnormally good days, like that, I'm just trying to say a routine, but you get an abnormally good day like that, you can be sure that it's going to be in play the next day. That's one of those where it might grow into a swing trade. And so then your technique would be to keep a piece of it overnight if you want to play the gap, or just use the money that it earned to start buying that position and then stay with it over the longer period of time. That's actually how we were able to start with silver back in November and May, and let that
Yeah.
thing just grow. And then as it starts accelerating intraday, it becomes a more lucrative target for the intraday trade, which means that now it's on a timer. And so you're looking for that kind of exhaustion move. Well, we have tools that allow us to figure out what that is. Oh, here's the other one I'm going to tell you. If you're in those swing trades and you got a good position, keep 70%. No matter what else you do, not even looking at indicators or anything like that. Go to your maximum favorable excursion and figure out what a 30% give back looks like. How do I keep 70%? If it was a single position, then it's really max favorable excursion minus the entry times 0.7. I'm just going to keep 70% of that move. If you've built a position over time, you probably want to convert that to what is the maximum favorable dollar amount of that trade, and how do I keep 70% of that? And that tells you how much you need to adjust your stop. Either you're all out or partially out. You can start using that as a guide to decide where your money management stop is. And that's significant because that is a psychological impact. If you have an amazing trade and then gave most of it back, that hurts worse than a 1 hour loss. So the keep 70% rule, of all the coaching insights that we've had in the last 18 months, I probably got to say that has had the most positive impact on our psychology and the ability to maintain a professional attitude. Keep 70%. Okay, your mileage may vary. I hear you thinking, Griff, well, what if I keep 80? What if I keep 75? Okay, go ahead and exercise your Edgerater back testing research. And whatever you do should be better than keep 70%. When you find a better rule, let me know. Over to you.
Yep. So the charts you showed, they were all intraday trades mostly.
Yeah, most of
right?
those were. I'm using 10-minute trades. The Canada was a daily chart, but it's kind of the same pattern. What you learn after a while is that these patterns are all fractal, and so the interpretation of the chart on a 10-minute trade, it's the same whether if it's an hour, a 2 hour, a daily, or a 3 day. If you want to get a leg up on long-term swing trading, take a look at 3 day charts. It's slower than 1 day, so the gap doesn't matter as much, and it's faster than a weekly chart. It's a sweet spot in between that daily and the weekly. And
Yeah.
the 9 day chart is a sweet spot between weekly and monthly. And you'll see these kinds of patterns with the ebb and flow and the Griff's favored cockatoos and emerging dragons. That stuff really starts becoming clear, very easy to frame, easy to teach. Over.
Mhm. Yeah. Anything from the group here?
I think they look like they're saturated, so maybe we just give them a chance to chill out. And then really, uh, just open-ended offer to just send me your questions by email, and happy to reply to them and get on with the Lord's work.
Yeah. Yeah, that's great. And we talked about having a session every quarter, once a quarter, we'll get together
Sure.
and have a little meeting here with Phil and Griff as well. I think that'll be a nice roundup of sort of current research and um, how things are progressing. So I appreciate that.
Sounds good to me.
Yeah, thank you. Well, thank you so much for your time.
I'll see you fellas. Duty calls.
Okay, bye-bye. Thanks, Phil. Thanks, Griff.
Thank you.
Thank you.